The broadcast is now starting. All attendees are in listen-only mode.
Good afternoon, everybody. It's Brian Caprice from Keep Trading Simple, and thank you for joining us today on What's Hot, What's Not, the Tuesday, April 14th session. Had a great week. I got to say, guys, I am absolutely loving the markets right now. Some of the volatility is calming down a little bit, and there's a lot of opportunity out there. So definitely excited about coming back to you guys today. We're going to do kind of the same format we did before. So before we get started, let me kind of give you guys a background for some of you that are new this week and do not know who I am. I'm the president and CEO of Keep Trading Simple. If we were just talking about this actually a second ago, but the way that I trade is a little bit different than other people. I'm a price action trader, and I try to stay with the basics. And the reason why I stay with the basics is because that's what's work. I don't overcomplicate things. So you'll see some of my charts today, and you'll notice that I don't have a lot of crazy lines and drawings and indicators, and I don't really believe in those things. I have a few basic things that I use. I keep it simple. I watch the charts, and again, you'll understand my strategy after a little bit of time today. I've created a number of different strategies using Nadex. I actually started with traditional options back in right at 2000, right for the tech crash. It was perfect timing to get in when it's like, wow, the markets are crashing. Let's trade the markets, right? So I got into it in that time. I've seen obviously a couple different market crashes at this point, so gotten a lot of exposure that way. Created a 30-minute trader program. I have a bunch of different programs that are specifically designed for Nadex traders, particularly for people that either have full-time jobs or they're doing other things or maybe trading other assets as well. I'm not a big believer in sitting in front of a computer for 10, 12 hours a day. Use technology. We have things we can alert ourselves on our phone. There's apps. There's all kinds of crazy things. We don't need to sit here staring like a zombie into a computer all day. And that's why I do what I do. I've traveled around. I've taught people how to trade in both the United States as well as Canada. I was with one of the big three advisory divisions as a financial advisor. So I got to see things on the inside as well, which also opened my eyes to kind of what's really happening behind the scenes. You think financial advisor, you're thinking this guy must know all the insights and outs of the market. And again, I got in there and it was amazing. The top guys in the office that I were in, I could, they didn't understand half the stuff, on a chart that I thought they would understand. I was just totally blown away with it. So I left and decided that my passion is really in teaching, and that's what I do. I want to teach people how to trade the markets. Definitely a family man. I am proud of my family. There's two boys. They turn 10 in 6 days. So I'm going to have two 10-year-olds pretty soon, and the little one's about to, but she's already the boss. I should put a crown on her in this picture because she's definitely, she's running the household. She's like a tiger baby, right? But yeah, the two boys are, twins, 10-year-old next week, big party this weekend. Obviously social distancing, so right at home. All right. With that said, let's dive into the Nadex risk disclaimer. First off, trading on Nadex involves risk. I know you guys know that, but it may not be appropriate for all investors. Trading can be volatile and investors risk losing the cost to end of their transaction, including fees. The information presented here within this presentation is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument or Nadex or elsewhere. Now, any trading decisions that you make are solely your responsibility. What does that mean? Very simply, if you're trading, it's completely on you guys, right? You have to be aware of that one. It's just one of those things that some people are like, well, you said, no. It's your account. You need to trade it the way that you see fit, okay? With that being said, guys, Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodities. We will cover all three of those today. And again, past performance is not necessarily indicative of future results. Okay, Nadex is a registered trademark of the IG Group. That's it. Let's dive in. All right. Let's see. Go down. So the agenda for today, what we're going to cover in the next 35, 40 minutes. I know last week we went a little bit long. We're going to cover the upcoming news events for this week. This is actually kind of a small week as far as news is concerned, but I absolutely, without a doubt, my favorite type of trading and most of my strategies are based off of news events. Why? Because we know when they're going to occur, okay? That's one of the things I like most about it, as well as that provides a catalyst, and there's a number of different reasons. First thing up, we're going to cover the indices. We'll talk about the NASDAQ, the Dow, and the S&P, and we'll probably jump into the Russell a little bit as well, but maybe not. I don't trade that one as often. We will cover Forex. Obviously, we're going to cover the Nadex pairs that are included, not all of them, just the Nadex-based pairs. And then we'll also cover commodities. Basically, by commodities, I mean gold, silver, and oil. Okay. Now, if you guys attended last week, you guys know that I do have a COVID-19 assistance code that I give out to you guys. As I joked about before in the past, I can't sew. I'm not a healthcare professional, so I can't save people in that way. But I can give out education and experience. So what I've done is I have a COVID-19 assistance. I'm giving you guys a code. You guys are more than welcome to go onto my website. If you're one of the first people to get over there, you will get free classes. And I was giving away 25 of them. I decided to make it even. I'm going to go up to 40 classes. So if you attended last week, you got the first part of the code. This week, you get the second part of the code. And if you guys haven't gone back, you guys can, obviously Nadex is updated on their webpage. If you're new this week and you want the code, go back and grab the code from the first one. So go to Nadex's website, go over there, watch last week's, pull the code, and combine it with the code from this week, and you guys can get a free class as well. And that's the best I can do to help everybody out in this kind of time of need, all right? So first things first, let's go over into the charts, and we're gonna start with indices first. So let's go, we'll start with the NASDAQ. All right, so NQ, you guys can see that this one is moving a little bit, right? Let me bring Nadex Gray because I'm going to show you a couple things. First things first in the analysis is at the bottom section down here. Hopefully you guys are able to see it, but this is the ATR. And if you're not using ATR in your charts, it's a way for you to determine what the current volatility is in the market. What does the potential move look like? What's kind of, again, what's the average, right? Could you get a gigantic move? Sure. But what does the average look like? How much could it potentially be moving right now, okay? As you'll see, it's aiming to the downside, meaning that a lot of this craziness, a lot of this volatility is starting to get sucked out of the market, okay? That's good because it helps you better prepare for, not necessarily better prepare, but better predict or see what the potential moves can be in picking your Nadex contracts, okay? So I look at this a lot. So for me, dropping down to the lower time frames, I'm starting to look for levels of supply and demand. On the 4 hour right now, there's really not a whole lot. Again, it's a little bit bigger time frame here. Dropping into the hourly, we're seeing, and again, what's important is I'm seeing where current price is right now, and I'm going to kind of go back a bit and see what we were hitting during that time. You can see there's two small levels here. It looks like we may have a little bit of a hiccup here, and actually, let me make this a little bit bigger for you guys so we can make this, let's see, make it a big there, and we'll change it to something blue. There we go, should be able to see that. So there's a little bit of a level here, as well as we have another level sitting right over here before this major one up top. So let's see how close we are. All right, so it looks like we got a little bit of room. Now again, this data is based off of ECN data, so it's slightly different based off of what the actual indicative value is in Nadex. Just make sure you understand that. You guys can get approximate values. For me, we got a little bit more to go. We're at, on this chart, we're at 86.21. It looks like we need to get up into the 86.80 range. So about 60 points higher than where we are right now. And we're gonna start hitting a little bit of a speed bump. Really, let's see if there's anything shorter on this one. No, you can kind of see the same thing. Looks like we had a nice bounce earlier today. This nice little move here happened right at the open at about 9:30. You guys can see there's a little bit of basing down here early in the morning, but for the most part, it looks like it wants to go up. Where we are right now, if we can continue pushing, obviously it's noon, things are gonna get a little bit slow. Again, we get a little bit higher, we could be looking for potential shorts. Now, one thing that I like to do, let's see, let me pull it up on the correct window here. I think it's over here. One thing that I want to talk about, guys, again, remember, we're not talking about individual trade setups here. These are not recommendations by any stretch of the imagination. But one thing when I have levels like this that I always like to do is I always like to look over and say, okay, what do the different kind of assets, kind of where are we at place-wise, all right? Now, again, I did this last week as well. Now, first things first, looking over at the touch brackets, again, I don't trade the touch brackets as often. I am more of a binary and a spread guy, but I always like to keep track. When I do have a level like this that looks like it could be a potential reverse area. Now, again, we've had a couple days up. Typically, we're looking for some type of a retrace, right? We want to make sure that we go over and let's see what we got touch bracket wise. Now, again, even if I'm not trading the touch bracket, I like to know where these floor and ceilings are and where the current brackets are across all the pairs. And again, I'm only going to go through this once, but I'm looking right now with that price up at 86.80. Looks like 86.87. There's a touch bracket right around that area. So for me, remember I said don't sit in front of the computer all day long. Set an alert. Well, guess what? I'm going to set an alert probably around that 86.80 area, which puts us about 7 points from this area, and then come back and see. Okay, listen, what time is it? What kind of news releases are popping up? You know, what do we have going on there? Oh, by the way, I did jump a little bit ahead. Let me pull that up real quick. Let me pull this over here. Let me talk about news for the week. G7 meetings today. Again, this is a global meeting done virtually. If you guys didn't see it, Expect news releases. We will probably heard some of it right now. You're seeing some of it right here. The meeting about 2 hours ago. We will probably hear different news releases from and comments made by the leaders of the G7, Germany, Japan, France, UK, US, Italy, and Canada. And that does have implications to move the market slightly. But for the most part, people are kind of a wait and see situation. So it's not a big, an economic news release. Tomorrow is a big morning. Obviously, crude oil, it's not on this list, but crude oil is tomorrow. Those data has been absolutely insane, crazy. Obviously the inventories are just insane right now. 13 mil, surplus, just nuts. But tomorrow morning at 8:30, there's going to be some movement in the U.S. dollar. This retail sales numbers, they're all expected to be negative. This is going to set off the morning open tomorrow. So regardless of your futures, forex, commodities, retail sales is going to be a big number at 8:30. Followed up by 10 o'clock, we have Canadian data. Okay, now this is also about the time when the markets typically reverse in the morning, that 10:30 time frame. So if you are a currencies trader, you may want to jump over and start looking at the dollar CAD positions because we maybe get some type of reversal around this time frame. Then followed at 11 o'clock, again, more Canadian news. And then tomorrow night, Aussie employment. Now, again, this is like non-farm, but this is for the Australian dollar. So there are two Australian pairs that are tradable in Nadex, right? Aussie dollar, Aussie yen. If you're not trading them tonight, shame on you. Look at these two. This will be a great one tomorrow night. Going into Thursday, you'll see that we have unemployment claims. Now, this number has been huge. This is what we've been watching. You guys can see over the last 3 weeks. Remember, these are not people that lost their jobs. These are first-time claims, so they don't carry over week to week. You guys can see here we're at basically 15 million people have filed first-week unemployment insurance claims. It's forecast to be another 5 million this week. That is obviously market moving. 8:30 in the morning. Again, recently it's been coming in horribly bad, and then the market goes up because, again, they're expecting more stimulus. After 3 weeks in a row, again, this number will probably start to decline a little bit. When that does that, we could have a potential kind of reversal to the downside, right? Because, no more stimulus. It's not as bad as it was. The worst is in. People are waiting to hear that the worst is in. Once that kicks in, we could have some definite market movement, right? So that'll be Thursday morning. Make sure you guys are watching that number. And then obviously Chinese data. Again, I don't personally trade any type of Chinese equities or anything like that. But for me, I do care about GDP and things like that for China. And the reason why is because they're kind of the first out of this whole COVID-19 crisis. So we're seeing their economy kind of reinvigorate, kind of repopulate, and start to expand, right? Looking at their GDP to see how bad it actually is going to be a good telltale sign, as well as it will affect, obviously, the United States. It'll affect the US dollar. It'll affect the yen. It affects a lot of different things, seeing what the other end of this looks like. Okay, so that's important to see. And then obviously going into Friday, not a whole lot there, right? Friday, this week, it seems like everybody's taking off. You'll see there's some minor data there, but for the most part, not too much. Okay, so big days for me. And again, I'll go back on Wednesday. Don't forget 10:30 a.m. on Wednesday. You have that crude oil inventory, and as you guys can see, this has been a big number. Look at this. Forecast at 3.7. We came in at a surplus of 13.8. That's huge, and this is why gas was cheap. And then last week, they tried to forecast 9.8, and it came in at 15.2 surplus. So obviously demand is extremely down for oil. If you're not trading it, if you've never traded oil before, it is definitely a very fun asset because you guys can directly see the effects of it. Go look at one of my students in Michigan sent me a picture this week, 99 cents a gallon for gas. How cool is that? It's not here yet in Maryland. We got down to like 115, I think, 117, something like that. I'd love to see 99 cents. I just think that would be really, really cool again. But it's cool because you can trade oil and actually see the results outside. If you buy stock, you don't really see anything. You don't have any control over it. But it's nice to, understand the oil and what the price of gas is. But could be a really, really fun number this week. OPEC had some agreements. Until they're actually in, it doesn't really matter. Until the demand is returned, it doesn't matter how much they're cutting it because we're not using it. We have so much surplus sitting there. All right. So that's going to be on Wednesday. So that's news. So let's go back to the chart. Sorry about that. I forgot that we were supposed to do that first. So on NQ, again, like I said, for me, I'm going to set an alert probably around this level here, just so you guys can see it. Let me put this in. My student said this was a good thing to do. Somewhere up in this range, maybe right in there. That's a little bit before the zone, that 86.60 range. That way to alert you and saying, hey, listen, Brian said that there is a touch bracket kind of ceiling up here. Let me go and do my analysis and see, could this potentially be a trade setup? Now, again, time of day, news, all these other factors, matter. But again, just keeping it front brain, write that down for a bit of a note, okay? S&P. So S&P, As you can see, let's bring this in, pull Nadex gray. Same type of ATR pushing down, but one difference between this S&P 500 and NQ on the daily is NQ has already jumped over this gap, right? It's already jumped over this gap. S&P, we have not jumped over the gap yet, so we're still lagging. We're a little bit behind on that one. So as you can see right here, we're pushing up. This is a big concern for me, kind of specifically sitting, again, one, there's a level sitting right here, okay? We're getting very, very close, similar to NQ, right? I said if NQ comes a little bit higher, there's a potential reversal area there. There may be a short. Well, guess what? This one is also getting in kind of the same situation. Again, this is on the 4 hour, not the smaller time frame. If it gets a little bit higher, there is a potential reversal area. And again, we could be looking for potential shorts, right? Again, the last time price came up to this zone, it got hammered down hard. Okay, so we got to keep track of that one, as well as it has to fill the gap up top. So there's two potential areas here. Dropping it down to an hourly, let's see if we can refine that zone a little bit. Yeah, there's a little bit of a gap there. So we can refine this zone just a bit. I'd say probably in that area, probably there. Yeah, that's probably safe, okay? So bringing it across, you guys can see, you know, something along those lines. If I was gonna set an entry for this one, let's see what we got here. I know you guys can't see this right now. Yeah, it's set for a different color right now. Let's see. Something along those lines. Like I said, depending, the stop isn't necessarily as important inside of Nadex, and the reason why is because the cost date under the transaction is also what it will cost you, worst case scenario, right? So it's a little bit different stop loss wise. It's kind of the entry area, and you want to kind of make sure it's in kind of that range. Just so you guys can see it. Oops, not text. I want to put this over here so you guys can kind of see where that level is at. This 2865 is kind of the same area. So again, it needs to go up a little bit higher for a potential short. This one, I actually like the shorting area a little bit better. Again, right now, it's just grinding higher, right? Impulse correction, impulse correction, impulse correction. And then again, it's still continuing to drive. There was a bit of an entry this morning, but again, we were unable to get into that one. It was super early. And again, looks like this one wants to continue to move forward. Kind of the same setup for me, right? Now, looking on the daily, let's bring this down. Same situation. Again, NQ up here, S&P down here, Dow is even lower. So in looking at these three, if you guys are trading futures or indices on Nadex, looking at these three, which one would you say would be the laggard, right? Go ahead and type it in chat. I believe you guys have chat on this one. Yeah, we do have chat. Type it in the chat. Which one looks like it's weaker of the three between the NQ, the S&P 500, or the daily, or I'm sorry, the Dow. Okay, that will matter for when the market flips, because when it flips, what's going to happen? The weakest is probably going to drop the fastest and will probably drop first. So again, look at those three. Dropping it down to the 4 hour, kind of the same scenario. Looking back to the left, there's a couple different levels over here. So there's one level that I'm looking at, kind of, oops, not that one, this one right here. Okay, and hopefully you guys can see the pink. You know what? Let me make this pink a little bit darker, not light pink. Let's go to pale coral. Yeah, it's better. Okay, hopefully you guys can see that a little bit better. All right, as you can see, there's a zone sitting right here. Kind of a similar setup, needs to move a little bit. Let's drop it down to a 1 hour and see if we can refine that zone just slightly. Yeah, see, actually this one is already marked off. The indicator actually grabbed it. And actually that's not a bad grab. So I'll delete this because that's a little tested area right there. So sitting right from where we are right here, you guys can see that there is a bit of a level sitting right there. Let me put a symbol in. And like I said, is this an automatic, hey, if price hits there, I'm selling it? No, what you need to do is you need to look at your chart, match up your price data, as well as, again, if you don't know how to use charting on Nadex, we'll put a webinar together for you guys on that one, or ask Nadex to do that one, to understand how to match the prices exactly. But this is another level. If price continues to rise, it's a potential area where we could have a reversal. Last time price was there, price again, it made an attempt to go higher, and it didn't, right? It failed right there, bam, did not go higher. Sellers came in and forced this down. And then if you guys see this green candle, right? This green candle right here, what happened? Price tried to come back up again, hit that area of supply, bam, pushed back down again. So for me, I'm feeling that, hey, listen, I need to know when that price is getting close to that area. I would take a line here and say, let's see, that's it, what, 24,467. So 24,330, that gives me plenty of time. Set an alert right here if you don't know how to do it inside of your software. Again, make sure you guys are using the help desk. Right there, set an alert if price comes up to there. Hey, listen, let me do my analysis. Does it look good? What's coming up? What type of news releases? What type of risk do I have here? What asset makes the most sense? Is it a binary? Is it a call spread? And again, could be the touch brackets as well. So let's see. Do I have my touch bracket up? Where is it? I have a little too many. Hold on, let me see. Let me get it here. I drug it back over and then I moved it. Let me see, where did I put it? Here we go. All right, so kind of the same thing, right? Look at the Dow. That level is approximately at 24,464, right? So it looks like 24. Looks like this one needs some of these need to be busted first, right? Because we're at 24,464 right now. This was at 23,844, so a bit more room. So again, that's why an alert is important. There is currently not a touch bracket that is that far up. Now, if you're looking to go long in this one to trying to play it to that area as well, you can do the same thing, right? If we're at 23, right? Let's see, bring it across right now. 23,841. You guys can see over here, there's a 23,730 is probably the closest right now. And again, understand the difference between the bid and the offer and what it's going to cost to get in position. But that would be a way to kind of play it up. For me, though, I actually don't like that one as much right now currently for a long. There was a bit of a level here. Let's see on the 30-minute if it marked it. Yeah, it did. It marked it. Okay. Here's where the entry was earlier. Now let me click time. If you guys can see, down here at the bottom, you'll see this kind of moving back and forth, right? That's where I have my time indicator in. You guys can see right here, what time did I say that the reversals typically occur? 10 or 10:30 in the morning. As you can see with the market open here at 9:30, what did it do? The opening print basically shot it straight down. At 10:30, what did it do? It hit a level of supply or demand on the 30-minute and turned and popped back up again. Not a bad move either, from 23,700 all the way to 23,941. So 241 points on the Dow from that reversal time. Again, that's why it's important to understand where these touch brackets are coming in at. Why? Because that was a what? 23,700? Yeah. I'm sorry, yeah, 23,700, 23,730. So there was your touch bracket right now. So again, this one's quite a ways up there and starting to get pretty close. It's got a little bit more to go, but it's about halfway through that touch bracket to the top side. So again, 10:30 reversal, it's why it's important to kind of keep these up. Again, I know not everybody understands touch brackets or likes to trade them. So again, you can always look over here at the call spreads and kind of do the same exact thing, right? So you can grab a daily call spread, and that was where, let's see, it was 23,700, or actually, let's see, it went down to 23,667. And again, that's based off of this platform over here. So look, there was this call spread right here. You guys can see that we were also at the top of this call spread with 3 hours to go. And this started at 8:30 in the morning. So, or started at 8. Sorry, this is the 8 to 4:15. So again, this would be another great one. Not grabbing it at market open, waiting for it to pull back, looking for that reversal time, grabbing something. And again, if you guys are not familiar with call spreads, I love them. Why? They typically have a little bit cheaper of an entry, right? And at expiration, like you could take it off right now. It doesn't have the same type of risk with a binary where it's all or nothing. Okay, so this would have been a great call spread to get into. And as you guys can see, this one is, doing quite well right now, right? It's way up there based off of what you would have been able to get out of it. And again, risk to reward, you got to make sure you guys match it up. But again, call spreads is the way I like playing these for the indices. All right, so those are the 3 indices right now. Again, kind of a similar situation. It comes up, set yourself an alert, do the same exact thing that we did here. Obviously, in the morning time, if you can catch it around 10 or 10:30, like if it just grinds sideways and we're up here tomorrow morning, absolutely look for a reversal in the morning. See if it matches your risk profile. Look at those spreads. Look at the call spreads, and look at the touch brackets. That's a great way to play this in the current market condition that we have. All right. So let's jump across the currencies. Now I know not everybody's a currencies trader, so we will jump through these a little bit quick. Aussie has been on a tear. Very, very similar to what gold has been doing, right? Gold's been shooting higher, 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 and that's what we've been having over here, right? Now, looking to the left, there's not a whole lot stopping us right now. There's a little bit of a zone up top, right? Pull that off. There's the level. So you can see that the ATR on this one is collapsing. Okay, currently the ATR on this pair is 123. Now again, this is why we watch and this is why we look at ATRs. You can see down here the ATR is obviously collapsing. At its peak over here, the ATR was at 229 pips per day. The average is down here, which was at about 40 or 50 pips. It's still at 123. So this is still considered a high volatility pair. So just be cautious of that one. But as we were driving higher, we were looking for areas of sellers, right? Or a pullback for a nice push, because at this point we pushed so far up, I'm more looking for a reversal. On the 4-hour, you can see this one actually had a pullback earlier today with a push up. It's a little bit of a zone here. Let's see, there is a little bit of a hiccup here, right? You can see it's right above where we are, but I don't know if that was going to be marked on the lower time frame. So let's look at this one right here on the lower time frame and see what we got. There you go. That one was marked. So I was correct on that. Let's check that level out. It's okay. I don't necessarily love that one as much. For me, what I'd be looking for more on the Aussie right now, as you guys can see, we kind of have a defined channel here. I bet you the 30-minute gives us a bottom in it too. Yeah, there we go. So we kind of have a top and bottom here. As you guys can see, same timing this morning, right? Right around, in this case, this pullback, this was about 6 o'clock in the morning. And again, even if you're not a currencies person, you guys can see right there. There's the last time price came down, formed a new low. Here's the new high. So we're kind of in a sideways channel. The zone is not horribly big. It's about 40 pips sideways. You need to be a little bit cautious with the Aussie and some of the currency pairs because the strike differential, at least on the dailies, has kind of expanded a little bit. You do have to be a bit cautious with that. So what I mean by that is if you go over and look at, say, the Forex binaries for the Aussie dollar, you're noticing, like, say, on the 3 p.m. dailies, you'll notice that they're 40 pips apart. So a little bit bigger right now because they are larger, because of the volatility, because the ATR is double. Be a bit more cautious with these. But looking at down here, you guys can see that the 2 hours, although there's not as much movement, you can see they're a lot closer, right? You're seeing that these are 4 pips. So the smaller time frames have really kind of jumped back to the smaller spreads. The dailies are still a little bit wide right now. So just understand that. Again, in this case, being 40, you're talking about 10 strike price, 10 strike jump here in the binaries for this one on the lower time frames. Other thing as well on this one, let me see. Let me see where these are placed in now. Yeah, these are still a bit big. These are still 6. So a little bit high on the 5 minutes for those. All right. So for me, this one is more sideways at this point. I think the trade was already here in the morning. If anything, what I'll do is I'll look at this one tonight when we have the Aussie news. Again, I love looking at Aussie news and trading this one. It's one of my favorite pairs at night to trade. Looking at this guy, Aussie yen. Okay. Now, Aussie yen on the daily, you can see this is very similar to what we saw in all 3 of the US indices. There was that gap sitting there, right? And price was coming up. Now, we've just tried to enter the gap for 3 days now, or 2 days. It's been pure sideways movement, okay? We're not able to kind of really do much with it from there, okay? From the 4 hour, you guys can see the gap is actually sitting above. So this is the zone that I've actually been watching, saying, hey, listen, we've kind of pushed above. We tickled it here. We pushed a little bit higher. I'm actually looking to get into shorts approximately, and I say approximately because, again, currency is a little bit different, approximately up here in the 69.71 range. Ideally, what I would like this to do is I would like this to rally a little bit higher. I'd like to be up in that zone before we have the Australian news. Okay, and again, this is how I combine news events with how I'm trading. Again, how do you find those? Go to websites like this. Okay, I use Forex Factory. I use Daily FX. There's a couple different things that I will use. You guys can see that tomorrow night, right? Today, nothing really, but tomorrow night, right here, this 9:30 p.m., I'm looking at this and saying, hey, listen, right? If price is up in this range, again, this is the 4 hour chart, it's got to come all the way up. It's got to move about 100 pips, which is okay, right? If it can put itself up at that gap around news time, I am going to probably be bearish biased. Okay, now again, anything can happen from now till then. It's just kind of what my planning is looking like going forward, okay? So that would be my kind of what I'm looking for here. And again, smaller time frames, you guys can see there's been bouncing back and forth on the 30-minute on this one. You can see this one came down and oops, there we go. Approximately 11 o'clock today. Again, very similar. Again, it's got the yen inside of it. 10:30 reversal, 11 o'clock reversal. Price slammed down into the zone and is now taken back off the top side. Actually, was not a horrible trade. I actually came down and we're right there for a 1 to 3 risk to reward. Had you guys set something like that up. Again, right now I'm assuming it'll get slow. It's about 12 o'clock, so this one will get slower in the afternoon. Looking at the euro yen. So euro yen. Again, also very much consolidated. On the daily, you can see this one's a little bit choppier, right? we've had a couple of days down and then it kind of popped, and it's bouncing off a level down here that it's had a very, very difficult time getting through. And again, it's consolidating down. The lows are, or I'm sorry, the highs are getting lower. We're currently only about 90 pips away from it. So it's about a day's worth of movement before we get back down. Looking at it on the lower time frames, you can see here's where that zone is. You know, it hit here once, hit here again. Looks like it wants to kind of put another level in, but we got to see what the approach looks like. So for euro yen, it's going to be a little bit more challenging. Dropping the much lower time frames, you can see it's literally bouncing back and forth between levels. It's only about 40 pips right now, bouncing back and forth on the short term. It did take this one here got front run. It missed it by just the oh so smallest of amounts. The other two down here, not too much. So if we break this, and ideally for me, what I'm looking for is I like this zone here. I think this top zone up top is not a bad one, right? It's at the upper end of the range. That's not bad. And I also don't mind. This one here has been tested, okay, showing us that there are definitely, I mean, again, last time price came down, what did it do? Boom, it launched out of it. It wouldn't have risen if buyers did not step in. How many buyers are left there? That's kind of, you know, that's up to you guys to kind of figure out. Whoops. But that could be a potential trade setup there as well if we come down. So as far as setting alerts go, on this one, I would set an alert approximately in here at like 117 range. That way it gives you plenty of time to come back. And again, that is about 40 pips or about 50 pips lower. And then vice versa, kind of set yourself an alert here. Now, until that alert comes in, do I need to look at it? The answer is no. You know, if I wanted to trade it on a smaller time frame, great, but there's a lot of other assets. Set the alert, continue on with your day. When the price hits either of these two blue lines for me, I will get a notification that comes to my phone. It'll come by email. It'll come by SMS. If you have the app on your phone, it'll also show you the alert on the phone. Then come back to the computer. That's how you guys set this up correctly. Okay, that's how you don't spend 16 hours staring at a computer screen all day. Okay, so that one's good for me. Pound yen. So as I've mentioned last week, I am definitely bullish the pound. I was last week, as you can see. You know, last week when I mentioned that it was bullish, a little bit of basing, and then we had end of the week, it did what it was supposed to do, or what I was hoping that it would do. It went higher, right? The ATR is just tanking on this one, right? Currently, the ATR is 160 pips, which is just slightly above what normal is for this pair. This one will fluctuate between 100 and 130 is kind of what normal is, right? When it peaks over here, you can see that the peak is approximately 200 when it was like, you had a big spike, right? At its peak during the crisis, though, we were 375 pips. Now, again, we're back down to 160. So it's getting back into that normal range, which will help with some of the kind of strike differentials as well. And again, this is why I use ATR so much. Looking at it on the 4 hour, you can see, is it trending? Not really, right? Now, this is a range of about 70 pips, so there is some movement in here. But because of the volatility associated with the pound yen, the spreads are typically much larger on this one, right? So what I mean by that, again, if you guys are unfamiliar with Nadex and you're new to Nadex, right? Here's what the spread look like. It's 40 pips. So in a day right now, if this is moving 70 pips and it's been kind of stuck inside of a 74 pip range, you need to be cautious with this because, again, actually, I guess there's 60 pips, right? 60 pip difference here. It's only moving one strike price over. So what you need to do to get around that until this returns back to normal is drop down to some of the lower binaries. You can see over here, now this is 10, right? On the 2 hour binaries, it's 10 pip difference, right? Well, right now I'm on the hourly chart, right? 30 pip ATR. So in 2 candles, take the last 2 green candles, you can see that this one has moved 54 pips. Going back across the Nadex, if you were able to get into that long, which is a small zone. Let me see on the 30 minute, did it pull it? No, it didn't quite pull it on this one, but there was a zone sitting right in here as well. But if you were able to capture that, how many strike prices? Is it viable? The answer is yes. It moved 5 strike prices up or down, depending if you caught the direction correctly. So the shorter term duration binaries are not bad for these. The daily and the longer ones are still a bit big for me, in my opinion. If you're okay trading those, then go for it. I'm focusing on kind of the smaller time frames as well. Now, this is always a funny one too, as far as the touch brackets go. You'll see that the pound yen is not over here yet, but the pound dollar is. So let's jump into the pound dollar here, because that'll be the one that we can use for touch brackets. So pound dollar last week, I haven't updated this. The ATR is not on the bottom. But if you remember what we talked about last week, and I think actually, yeah, we did it here, not on this one. Yeah, it was on this one. So last week I said, listen, I'm still overly bullish this position. I do believe that the pound in particular is going to recover faster than most currencies because they were already at rock bottom because of Brexit. And what did I talk about? What was my rule, if you guys remember from last week? Typically, when you have zones and they get touched, 3 and 4 are the magic numbers. There was one touch, and again, I think it was drawn, I think we drew it off of this area right here. And what did we say? There was one touch. There was 2 touches. There was 3. And what did I say? The next time it comes up, it's most likely going to fail. And what did it do? It hit, it based, chewed the rest of the orders, and then boom, popped right out of the top. So again, this is not some crazy fancy indicator. I'm looking to see where prices has turned before. I'm using supply and demand, and I'm combining that with, again, the whole philosophy behind supply and demand is there are orders there that have not been eaten up. Ate some. This was the magic one, boom, and went higher. So with that being said, let me update it now so you guys can see the ATR of this one as well. So ATR obviously on the daily also collapsing, not quite back to normal yet. It's 179 right now. This one was typically around 90. Looking to the left on the daily, we don't really have a whole lot of anything to really kind of slow us down until this range right here. Now, let's drop to the lower time frames and see if we can find something a little bit better. On the 4-hour, zone is still good. Nothing really until we get down there. On the 1 hour, ooh, it looks like 1 hour, it's the same thing. Yeah, it's a little bit of a minor zone. Let's go look at it. Yeah, it's marking a little wick over wick. I'd still probably use that zone. Either one of these two would probably be okay. This would be more the aggressive. This would be more the conservative. Either one of them is probably fine. Again, would not take this lower one here. So let's see what that looks like. It's approximately, price is kind of sitting up there around 128.05, right? 128.05. How much room do we got for that one? And we got about 160 pips before we can get up to that range. Let's see, is there anything long that we could potentially get into on this one? Not so much. Don't love as much. There's a little bit of a zone down here, but not anything great. Let's see on a 15-minute. A little bit down here, but the prices move quite far. So it's looking for sellers is what it's doing. It's looking for some type of an area to sell. So again, best way to handle this one, ideally, I'd have liked to get you set up on this one. I would do the same thing. Set yourself an alert. Let's put it in front of the zone. Set yourself an alert somewhere in this range. So yeah, so we're good right there. Set yourself an alert, approximately 127.50. See what price looks like. Again, depending on the time, if it's the London Open, what type of news we have, we can look for potential reversals somewhere around that area. Some type of a pullback, right? Again, we're looking for fresh zones. This one got, obviously hit 4 times. Number 4 was the magic one. We'll see. We'll see what we can get up there. Looking at Euro Pound. So Euro Pound, all right? Euro Pound's been having a little bit more of an issue. So again, still weak. And again, going back to Forex Factory to show you this one. In the last 24 hours, so this is another tool that I use quite frequently, is what the 24-hour pip change has been for currencies. This one a little bit high, this one is a little bit low, but you'll see the Euro Pound has only moved 25 pips in the last 24 hours, showing me that it's not really moving a lot. We're seeing a little bit of chop back and forth on there. So again, understanding the volatility that's associated with things. So where we are on a daily on this one, you can see we had 2 kind of alert lines, right? We were looking for kind of breaks through. For the most part since last week, again, this has been continuing to push down, which is what? It is pound strength. And again, that's what I talked about, being in a better position. Now, interestingly enough, we do have a zone coming into play right about here. So we're getting a little bit close, which would also coincide with the pound dollar, right? Pound dollar was in a position that if it continued to rise a bit higher, there's a potential supply zone looking, basically showing that there could be some pound weakness stepping in. Here, by this going down being the second pair, kind of the same thing, showing us that there's potential strength in this one coming in, or strength in the euro, weakness in the pound. Dropping down to the 4-hour, you can see there's a whole lot of stuff in here. So let me delete that so we can get a little bit clearer picture. So, all right, so euro pound, it looks like we're having a little bit more of a kind of a big pothole section, right? Like going from pavement to rocks into potholes is kind of where we're hitting right now. So as you can see, we had a bit of a zone there. Let's see on the lower time frame. Yeah, there we go. Look, so we see these zones here. Price was able to pop. That's from last week. Got a little bit of a pop, grab some zones, and then continue the push. So for the most part, again, it looks like this is continuing to grind lower. I would still probably go to the higher time frame, and let's see, where is that on the daily? I'm gonna kind of keep track of that one there. Whoops. I'll bring this one down. That will pop back up. Yeah, so it looks like I'll use that for an alert. And I'm actually going to focus on, let me see something here real quick. Let's see. Yeah, I'm actually going to use that instead. I'm going to use this range right here is kind of an area where I'm going to start looking. So I'm going to use this as an alert. I'm going to set an alert on this one and have this alert coming in right there at 86.66. If that breaks through, again, look for kind of potential longs inside of this range down here at 86.24. And again, match it up to yours, but I'm looking for, and again, looking on your charts, I'm looking for this zone where we had this nice strong pop, a 3-candle base, and then 3 more pops straight out the top, right? Look for that as, again, potential area for reversal. And again, here is, again, where euro strength and pound weakness comes in. Coincidentally, same thing. If price pops, same thing. If it reverses, it would be pound weakness. So pound weakness, if it goes up, pound weakness for it going down. Okay, so again, coinciding on 2 different time frames, very important. Looking at the euro. Okay, so here's the euro. These are smaller time frame. Let's pull those out. Those alerts are gone. As you can see, this one is also in somewhat of what I would call a consolidation pattern. Okay, high, lower high, lower high, low, higher low, higher low, higher low. So it's starting to form in. It's kind of compressing. Now, also important to note, again, Forex Factory, this one has only moved 61 pips in the last 24 hours. This one has actually been quite shy. Okay, looking at the ATR on this one, you'll see this is also collapsing. The current ATR is 115 pips. On average, this one was about the 50 to 55 range. That's a little bit low. It should be about 60, 65. Again, this was affected by Brexit slightly. At its peak, it was about 196. So we've taken about 70 pips off. Going back, you're starting to eat up some other of these big positions. So again, returning to normal, okay? Now this one's running into a zone right in here. So again, we got about what? About 50 pips before we get to that zone. Dropping into the lower time frame, you can see that there's a little bit of a zone right here. There's a little zone sitting right here, and that's what we kind of bounced off just a bit ago. Something along those lines. So it looks like that's what we're hitting. It almost came down and hit a 1 to 3 on that one. Not horrible, but this one looks like it wants to continue a bit higher. It looks like we have some dollar weakness stepping into this market. It is having some problems. It is going sideways. The one time it did come up into this prior level, this wick over wick that my students love, it got hammered back down again. So with it being late in the day, we'll see what type of, what happens with this one dollar-wise. That 2 o'clock is going to be a big thing. If we close up top here at the U.S. market, again, I could be looking for some type of a short. Let's see. I was hoping it'd be a cleaner top on that one, but it's not. Let's see. No, that's probably fine. Yeah, this one's getting late in the day, but yeah, there's a little position here. I like the pound, I think, a lot better than this one. So we'll just skip this one. Dollar CAD. So dollar CAD, you guys can see, after this enormous run because of oil, price is starting to slow down and it's retracing back again. So looking on the 4 hour, you can see, although it was a very impressive run up, the run back down again has not been as good. We have a zone mark there. Let me bring the new one in. As you can see as well, guys, the ATR is dropping. It's not coming back as fast, though. It's still probably about 60%, where the other ones are down here in the 30, 40% range. So it is coming back down, okay? Looking at it on the hourly, you can see there's a little bit of a bounce this morning. And again, that bounce occurred, what, approximately 9 o'clock, 10 o'clock. Again, it's the same kind of reversal that we've seen in a bunch of different pairs. The US Open, bounced down, 10, 10:30, reversed, and turned back to the top side. It was an okay mover. I mean, you're talking about 30 pips. It's not, it's all right, right? On a typical day, we'd be happy about that one. But again, make sure you guys are seeing where the contracts are, right? Looking at dollar CAD over here in binary land, right? On the daily, you're talking about 40 pips. So while 30 pips looks like it's great movement, it unfortunately, because of the strike prices are still expanded because of the volatility based off of looking at the ATRs, it's still a bit high on this one. On the lower time frame, and again, if you wanted to look at something like the 10 to 12, I can't even look at it right now because it's after 12, but it should be about the same here. You guys will notice that here it's about 20 pips. So the dollar CAD always has a little bit wider spreads. I'm not sure why, because its ATR is about equivalent, but that's just one of the things to be cautious about on this one. Now, typically, because of the spreads are larger with the binaries on this one, again, I will also dump down here into the Forex call spreads and kind of look at some of these. So here's your daily. And again, that reversal occurred approximately, what, 38.60-ish range. And these are a little bit far. Let me see, the 7 to 3. Yeah, here we go. Probably, let me see here. Yeah, 38.60. So these are off by a little bit. It looks like it didn't. It looks like it had moved a little bit too much this morning. Like I said, 38.60. That would be at its best. You're looking at being at about 60 pips down. So looks like call spreads wouldn't have worked for this one this morning either. All right, and again, it's going to happen. Not everyone is going to have the ideal setup. So dollar CAD doesn't look like it's going to have much. Again, this will be sensitive to tomorrow morning for the oil inventory report as well. Oil is good. Oil is bad. It will affect the dollar CAD. Okay. Looking across at this guy. So a lot of different triggers on this one. Let me delete these so we can kind of get a view here. So as we knew before, we turned off of the daily and it literally collapsed. Had a little bit of a pullback. And again, if you guys are wary to what I'm doing, there is my wick over wick in the middle. Had a nice reversal, kind of pushed back to the downside. So now it looks like, again, we are having a collapse. The US dollar is showing a lot of weakness. That makes sense because against the euro dollar, you're seeing it go up. Against the yen, it's going down, right? The pairs. So it's making sense across the board here. On the 4 hour, you can see we are sitting in a bit of a zone. Again, it is getting late in the day. We will have a rush later. So this actually may be, technically, it could actually be a shorting opportunity. If we can break this, what I would call one, and again, I call it a Harry Potter. Again, it's a momentum breakout to the downside. It's looking like a potential setup here. So it looks like, again, we got to refresh the data there. There we go. So it looks like we're deep into the bottom of the zone and basing. It looks like it wants to break here. Let me see on the 30-minute. I actually want to see. Not a bad zone, but again, that was a retest. Let's see, where's the bottom of that zone? That's what I was looking for over here. Mark this off. I want to investigate this area on the lower time frame. Let's see. Where did it go? There we go. That's what I was looking for. That's what I want to investigate right there. All right, so let's see. That and that. Actually, I don't even know if I don't think I like that bottom section. So what I don't like about this area here, I'll explain it to you guys. So this is what I don't like about this zone. Yes, there's an area here. What I don't like about it is there a strong movement? Like I like stuff like this, strong. I like things like this, strong push away, right? Strong push, right? This is just an area of grinding, so it's not really the best area. I was trying to see if we could get a better reading of where the actual zone is formed from. Fortunately, we can't. So looks like the way that we would handle this one is basically playing this short to the downside. Looking to, again, find a good entry. The way you need to find this, though, is you need to drop down to something like a 30-minute and find like a decent level to jump in. Hold on, let me delete this box now. Let me delete this. Let's drop down to 30 minutes. So what we're going to need to do, pull this back. We need to find a nice little pullback. So like here was a pullback, right? Here was a nice little pullback right here, right? My fib's set. Hold on, I got to do the other one real quick. Here. Oops. All right. So I don't know if you guys can see that or not, but basically there's a zone built right here. Okay. Here was your risk level. Again, your 3 to 1 is what just hit. Your 3 to 1 level it's showing is right here. Whoops. Okay, so this is just an example. Okay, this is an example of how to get into positions with the trend. Okay, not everything we do is counter trend, but that's kind of where, again, if you guys can see the lines, I know it's a little bit harder to see. I need to change it inside the indicator settings. But basically, that's what it was looking for. Look for a pullback as it continues to push down. Now, great profit target. We knew there was a zone sitting here right now. Look for something similar. Again, this took off. Let's see. Oops. Again, 9:30, 10 o'clock. Okay, that same reversal as it pulled back into a zone. Okay. That zone's probably okay for again, but I'd like it to form something new. You could potentially move this down if you wanted to. You could drop it down into this range, most likely, for a pullback, okay? It's not my favorite. I think there's better opportunities right now, but again, 9:30 in the morning, you got to look for these. That was the great reversal, all right? So let's jump over to oil, okay? So oil, again, this is ECN, the candles are the same, the prices are a little bit different, but ECN wise, you can see that we are starting to approach that bottom area where that low was, right? Again, I don't have a problem with this. I know everybody from Texas is like, no, but again, I'm okay with price collapsing here. So you guys can see a bunch of X's again. The X's were based off of 1, 2, 3, boom. Talked about that again, right? 1, 2, 3, and number 4 was the guy that went through. Let's go back and do it off this one. As you can see, the ATR on at least on the daily is still slowly coming back down again. You see it's collapsing. Oil, I've been bearish on this one. Like I said, coming back in, I just don't see any reason for this one to go higher again. Demand is so low. I'm trying to see if there's an entry on one of the lower time frames, and really, there's not. There's just nowhere to get into this one. And even lower. Yeah, see, even in the lower time frame, it's pretty hard. Now, we are coming into areas, again, like I said, this one, there's only a little bit of time left. The best way to trade oil is to look at it for tomorrow. Again, look at it tomorrow in the morning. What I would say is, again, there's a bit of a zone down here. Now, again, remember, I'm based off of ECN data for these, so they can all be on the same platform. This level is coming in at $20, but obviously it's a bit lower over here. But you'll see on your charts, this kind of big push, that base level right there, you'll see that candle. That's where your level needs to be. And it's about, on my charts, is about 70 cents below where we are right now. That could be an area where tomorrow, if we have ourselves placed into there before the oil inventory report at 10:30, there's a potential long. And I always love to show this as well. Where I'm going to look for that one tomorrow is, again, first things first, and again, I got to see how much premium is in there, but inside of here, because the release is at 10:30, there's 2 ways to play it. One, you can do the 10 to 12, and again, the benefit of the 10 to 12, and we can't see it right now, but the 2 hours, the strike differential is closer, okay? That's helpful. You could also look at this one on a weekly basis, right? Those are a little bit farther apart, they're $1, or you can look at it the daily, and again, those are about, what, 40 cents at this point? Yeah, 40 cents apart. So there's multiple ways to play this one on the binaries, okay? Now, again, it depends if it's in that zone. Sometimes, though, the binaries, especially with as high as the surpluses have been, these get a little bit crazy right now, so there's other things we need to do, okay? There are commodity call spreads, and you'll see there's a bunch of them, natural gas, soybeans, and everything. So you can look at crude oil over here, and again, some of these are not bad. They're typically broken up by 50 cents. That zone is sitting down here right around $20. So most likely, this will be probably close to the floor or the ceiling. Now, I do like call spreads for news because it does not have the kind of knockout on the bottom side. So if you do get a little bit of a whip down before it goes up, you are protected with the call spread, but you're not necessarily protected with the touch bracket or the knockout, okay? So that's probably where I'm gonna look. And again, if you come over here to the touch brackets, you can see commodity, you can see that crude is in here. There is a couple different setups in here, and again, they have multiple days left. So the advantage of the touch bracket for the oil release is you will have time. So last week, right? Last week, had you gotten in, we were right here. The date of last Wednesday was the 8th, which is right here, was right here, okay? So had you waited for this to get some type of some type of a signal in, you were able to take advantage of movement from $26 all the way down into the 22 range. There was a $4 bit of movement in there. So if you were able to time this correctly, again, the advantage to trading the touch bracket is you had multiple days left to go, where your call spreads, unfortunately, the most we have right now is a daily. Okay, so that's kind of the pros and cons of those two for trading oil. All right, so again, looking at that one. Looking at gold real fast, guys, and again, I want to get out of here and give you guys these codes. Gold, for the most part, has just been going straight up. Now, I talked to my guys about this last night. I am not really bullish gold, and here's why. Gold bulls are playing inflation. With the economy where it is right now until COVID-19 is done, there is no demand. There's no reason for inflation to kick into the market. So it's kind of like an early inflation play. I do think that this one, for me, if anything, I'm really looking for areas to turn around because it's kind of at these like near-term all-time highs, not all-time, but near-time. I just don't really have a whole lot of setups in these that I really like. Even on the 30-minute, you can see, I mean, it's put a lower high in, so it does look like, again, my opinion is there's going to be some bearish movement in this one. Do I have a trade set up on it? Not really. I mean, there's a nice little position up there. Again, if you have targets on this one, If you are short this position, definitely I'd be very cautious at this range right in here at that 1720. The last time price hit here, it popped. I mean, it did it here as well, but not really the best of zones. If we do get back down here, there's also potential long, depending on when it hits. But gold has been a little bit funky. For those of you, again, the way that where those are at, again, you can trade that one with commodities. You can do it with the spreads. And again, the spreads are not, not hard. Whoops. On the daily, not horrible, right? They're about 20 apart. So, there's definitely some trading things in there. There's commodity binaries as well. And I know some of my traders are using these, particularly the 2 hours. Okay. Why? Because the area is a little bit smaller. Okay. So there's definitely the ability to do that. And then as far as touch brackets go, there is gold touch brackets. The benefit of the gold touch brackets, again, had you been long last week, you guys can see that this did nothing but get straight up. So had you caught this entry here when we broke out of the top, and again, there was a zone sitting right there. Had you got in, the benefit is you had multiple days in a row. You could have rode this thing much, much longer like a futures contract and not like a traditional binary that only lasts a day. Okay, so again, the commodities, you got to go down to the touch brackets. There are definitely some huge benefits over there. And that's it, guys, as far as gold goes. So with that said, let me jump back into the slides, okay? Time for the free codes. So as you guys know, last week, I had this COVID-19 assistance I'm giving out, and I've actually changed this. I should update the slide here. Let me go down and I'll actually hit it as you guys are in here, right? Remember last week you guys got a code, right? The first word, don't say it in chat, but last week you got a code, okay? I decided 25 was not enough because we had a lot of people on, so there's 2 different things you guys can get in here. Here's word number 2. Remember, if you missed it, go back and watch it. Go on to Natix's website or go find them on YouTube and go look it up. So I can't knit, I can't sew. I'm not a healthcare professional. I don't own a grocery store, but what I can do is I can give out education. It's absolutely free to you guys. What y'all have to do is, again, I gave out 20 of each class. So the second word, again, remember the first word. I'm not going to say it. You take the first word, you combine it with the second word, and there's 2 choices. You could use the first word plus option or the second word plus volatility, and you have the choice of getting the 5-minute binary course absolutely free or the brand new high volatility trading course that is being released on the 17th, this Friday. And again, with a high volatility, you guys heard me mention multiple times tonight, the ATR as well as what's happening. The spreads are wider, they're larger. That's what this course was created for. And again, I'm doing the recordings and I just finished up the slide deck today, and those will start going online. So what it is I'll show you where the website is. You can go there, first word and option, no space, or first word and second when you do this one. Now, here's how you do it, guys. What you do is you go to the course. You can go to this website at the bottom, okay? I think I could probably put it in chat, right? I could put it in chat. Let's see. Nope, not that one. What I'll do is I'll put this in chat. So what you do is you go to the website, right? Go to the website or type that here or inside of here, and you can go to that right there. Go to that website, click on courses, or they're at the top or the button on the left, and hit that course. When you do that, you'll see a list of a bunch of different courses on there. The 2 that this is included for, or the 5-minute binary course, as well as the high volatility trading course. All you have to do is click on them and go to check out. Okay, when you go to check out, what you'll do is you'll see a price included in there. Look for this have a coupon button. Click the have a coupon button. And again, because it is the high volatility trading course, you're using the first word from last week with volatility, right? With volatility, right here, okay? First word, no space, include volatility on the end, and then this is what you'll do, okay? What you'll see is 100% discount for the high volatility trading course. Hit the enroll button, boom, you are in. Free course. Any questions about it? Again, get joined up on Discord. I can help you guys with it. And again, you'll be seeing me talk about some of the things from here next week as well, all right? With that being said, make sure you guys mark off your calendars. Tuesday, April 24th, we will be back on at 12 p.m. Eastern with what's hot and what's not. And if you have any other additional questions for me, you guys, this is how you reach me. The main website is keeptradingsimple.com. The bit.ly right here, to make it a little bit shorter, is where the classes are housed. That's actually on the Thinkific site, not the other site that is listed up here. You can catch me on Instagram, Facebook, YouTube, every night from, actually, I guess not every night, Monday through Thursday on Twitch, 9 p.m. I do breakdowns as well. Join Discord. It's absolutely free. Ask questions or just email me and I can get you the information as well. support@keeptradingsimple.com. All right. Let me see if there's any questions in here real fast. Let me pull the questions out. ATR definition, average true range. Yes, William, ATR is the average true range. It was created by Wilder. He's created a couple of really great things, ADX as well. Do you send a replay for the webinars? Yes, I believe they get sent out by email, Lorena, so you'll be able to catch those. Quinn, good to see you caught those as well. The link isn't working. It should be working. Should be working. Should be. Yeah, it looks like it's working to me. All right, guys. So with that being said, any other questions, you guys are more than welcome to email me. Remember, the first word from last week, the new one from this week is, again, you got to add it in there, no spaces. And please, do not get both classes. If I see anybody that took advantage and took both classes for free, I will delete the second one and refund the code back to somebody else that's able to use it. Please just make sure that, in this time of giving, grab one, trade it. If you have any questions, give me a ring. And again, thank you guys so much. Catch you guys next week.